Welcome to the Lisbon Sessions with David Russell of New Frontiers, exploring the Portugal Golden Visa journey with leading experts across the industry. In this episode, filmed in London, David Russell meets with tax advisor Jeremy Giles.
So I'm sitting in the lovely surroundings of the Stafford Hotel. It's not lovely outside, I can certainly say. Jeremy, with the legend that is the tax legend, the tax advisor to the stars, shall we say, Jeremy Giles. And over the course of the next 5-10 minutes, we're not going to bore you guys too much, but to anybody watching, we just want to give a bit of an insight. We'll kick back to the budget of last year, how that's influencing the hearts and minds of the UK population. I'm David Russell from the New Frontiers Fund. We're a private equity fund that qualifies investors for the Portuguese Golden Visa, should they seek second residency in Portugal, which a lot of people are actually. So Jeremy, just to kick things off, again, we're just going to keep things sort of light and punchy. The budget of last year, late last year, what's changed, would you say, in the hearts and minds of the UK population? We've had the non-dom changes, all that non-dom changes. What would you say?
I think the main sentiment is that people are beginning to realise that we might be heading back to recession.
Okay.
And I think I asked a room full of accountants, 100 of them, what they thought was the most significant change in that budget, and they all said employers' national insurance. Right, so for themselves running businesses, and also for their clients running businesses, looking to grow, looking to recruit. Combine that with the national minimum wage and the increases there, the lowering of the threshold where national insurance starts. It's a recipe for contraction, not expansion. Okay. So domestically, that's the most notable effect. More widely, internationally, it is changes to non-dom regime, changes to remittance basis, changes to excluded property trusts, and also cap that with or add to that the changes to business relief and agricultural relief, which again is another mostly domestic, but anybody with a business is now going to be paying tax on the value on the second death. So for a budget that was supposed to encourage growth and kickstart the economy, it's done none of that.
Right. And the question then is, are people looking potentially to leave the UK and for residency, second citizenship abroad?
I think since actually before the election, when the Conservatives delivered their last budget, which stole a little bit of Labour's thunder when it came to changing the non-dom system or refreshing the non-dom system, let's call it that. A lot of my clients realised that the changes were going to be significant, and Labour immediately announced happy with those, but they don't go far enough. So I think Rachel Reeves' comment as Shadow Chancellor, that kind of signalled Labour's intention to go further, and yes, they did. And by effectively unwrapping excluded property trusts, so those that have been here already long term with a proper legitimate tax wrapper, that's going to be unwrapped. So those people are the first to go. They've realised that they are not staying for that. And then you've got the people who are UK resident, UK domiciled individuals with significant value yet to be realised, have calculated that they're better off becoming non-resident as well. So you've got two groups of people, resident non-doms who have left or are leaving or thinking of leaving, and you've got the UK people who have realised that they don't want to be crystallising any value, selling any businesses, taking much in the way of dividends whilst they're UK tax resident. So they're looking to go as well.
And for anybody watching this video who's in the UK, who is finding things a little bit of a squeeze, a shock to the system, and is looking internationally, what are the steps they have to put in place to ensure that they do things in a proper manner with no surprises in years to come from HMRC, shall we say?
Well, I would say the first thing to do is, or not to do rather, is to Google the approach, which I see a lot of people come to me who've looked at it online and can't. They've got themselves dug into a huge hole of confusion as to what how to actually leave, when to do it. The question I get asked a lot is where to go as well, which is something we're having this conversation.
Yeah.
But the when to do it is probably the first thing. Well, the first thing to do, speak to someone that knows what they're doing and
Yep.
has done this before, because it's complex, but actually if you get the steps right, it works.
Okay.
You can get it wrong. I see people who leave mid-tax year, then dispose of their assets, and the revenue say you're still tax resident.
Okay.
So they tax them
So
anyway.
timing is essential.
My advice is usually, whenever you leave, so tax years, UK tax years, 6th of April, 5th of April, you must acquire tax residency of another jurisdiction.
Okay.
And then I would even wait till this current tax year rolls into the next one. So next 5th of April, so soon, coming soon. Don't do any disposals or any rearranging until the 7th of April 25. So wait till this tax year's rolled.
Yeah.
Regardless of the tax years where you are moved to, just roll the tax year, then do your disposals. And then you've got to stay non-resident, non-UK tax resident for the current rules 5 years, new rules 10 years.
Right.
And
so that is essential.
That is really quite a technical. With a statutory residence test, we now have to look at that in detail, because the domicile system is being separated from taxation. It's still going to exist for legal concept, but for tax purposes, domicile will no longer be relevant, and it will all be about residency.
And in terms of your experience, Jeremy, because we are at the fund, we're getting a lot of UK nationals because of the situation in the UK that Jeremy has outlined. We're also getting a lot of US citizens because of the new administration over in that part of the world. In your experience with clients that you have, Jeremy, are some of them personally looking to have second residency in Portugal, or what do you feel is the landscape for people looking abroad?
Being asked that question, where's best, where should I go? I mean, that's a kind of a lifestyle choice for a lot of people. But yes, Portugal has always been a popular. It was popular until the last check when they first. I don't know. The government keeps seeing. So from my point of view here, the Portuguese government keeps changing the.
There has been a few. There has been a bit of chopping and changing. I think we're getting into calmer waters now.
I know they were worried about a spike in their property market.
The famous MAIS. My Lisbon colleagues will criticise me for butchering it, but the MAIS Habitao bill you'll be referring to, it's the More Housing Bill. So it was a very hot potato politically, and basically, as happens in a lot of jurisdictions, that is very attractive with international money. The property prices were being inflated out with the sort of clutches of the local population, the Golden Visa, and various expats were blamed for that. So property was removed circa September, October 2023 now. Obviously that caused a bit of a hoo-ha because a lot of real estate agents, naturally, had I been in the real estate market, were putting out last chance for Golden Visa, etc. And of course, it kind of threw a blanket over the Golden Visa as a whole program, whereby really all that had happened was real estate had just been extricated as a qualifying asset class. There was a plethora of other ways in which you could get into that. So again, Jeremy, we seem to be entering calmer waters now that there is a group of private equity funds, which New Frontiers is one of, which you don't have to invest the full 500,000 into a fund as long as you have a portfolio, all of which are qualifying funds, and the sum total is 500,000. You're absolutely fine. So since that sort of act came into place, we had a calmer 2024. In which the New Frontiers Fund returned 10% to investors for anybody interested in the Golden Visa journey. But yeah, it seems to have calmed. So hopefully we are in calmer waters now for the next 2-3 years. And I think with the major political parties there, it seems to be supported by a number of the centre, left and right parties as something to bring revenue into the country. Everybody, thank you for watching. I've been in conversation here with Jeremy Giles, tax advisor to the Stars, and lovely surroundings of the Stafford Hotel. We'll put Jeremy's details up. Please get in touch. And as I said, for anybody considering the Portuguese Golden Visa, please reach out to both of us. Please reach out to myself specifically if you're interested in the New Frontiers Fund and in enhancing renewable energy in Portugal while making a 10% per annum return. Thanks very much for watching, everybody, and see you on the next video. Thank you, Jeremy.
Thank you.